So I wanted to talk about something that took me a while to get over. It's something I'm still have to work on to this day, and that's to stop looking so much at just the entry pattern, right? And focusing on the context. All right. And what I mean by that is we get so focused on just looking for this pattern, all right, that we forget the higher time frame context. And it took me a while to remember that myself, right? So again, that comes down to analyzing the higher time frame, right? What's the narrative? Right. So when you come to a higher time frame chart, right, like the daily, you always want to ask yourself, where are we coming from and where are we going? Right. So in this example here, all right, looking at NQ daily, where are we coming from? We're coming in the terms of order flow, right? We are coming from a level of liquidity, all right? Sell side liquidity, right? And what do you expect we're going to do? Like trading, we only trade in terms of liquidity and balance, all right? So if we took out liquidity here, we're only going to one or two places: imbalance or liquidity. As you can see here, imbalance, right? More liquidity, right? So where are we coming from? Sell side liquidity. Where we're going? Imbalance, buy side liquidity, right? Everything is bullish here. This is all bullish, right? So that should be the type of context and narrative that you have coming into a day, right? I'm coming from liquidity. Where am I going? I'm going here. So when you're going down to the lower time frames, you're not focused on the entry pattern. You're focused on the narrative. The entry pattern should be the last thing that you're focusing on, right? Because you're going to see this happen all the time, right? That's a terrible, terrible drawing. This is going to happen all the time, even this way. You'll be confused if you don't have the higher time frame context, right? So if you come from the daily, then you go to whatever your, intermediate time frame is, right? For me, sorry, it's the 1 hour, right? And I ask myself the same question that I just asked myself on our time frame. Where are we coming from? We're looking at this day. We know when the day opens up, we're coming from this February gap, right? Level of liquidity. We tapped into it. We seeked buy side liquidity, right? We kind of got choppy here, right? So when it's time to enter, look for a day, look for an entry, right? Where are we coming from? Buy side liquidity. Where are we going? Internal liquidity here, right? We didn't in this day we didn't tap into liquidity, so this wouldn't have been a good day to trade, right? On this day, right? Ask yourself when midnight opens up, where are we coming from? Coming from buy side liquidity. Where are we going? One or two places: liquidity, imbalances. All right, liquidity here, here. Not anything significant, but liquidity. I think on, and we was aiming for this one, but I think on ES it was actually the previous day's low. Right, so you could use that as SMT. So when we're looking at this and we're looking for entry, now you can focus on the entry pattern. All right, that should be the last thing you're looking at, right? So you have all this context, coming into the day. You have the higher time frame, the daily is bullish. You're keeping up that narrative until price shows you otherwise. On the 1 hour, again, you have the context, right? So now, again, the entry pattern is the last thing. So it could be any pattern, any entry pattern you want to use, right? In this case, it's a mitigation block, right? Here, we come up, we didn't take out this low. We came up sloppily, so this wouldn't have been a good trade anyway. All right. And then you got another entry pattern here. Stop run, entry of Fibonacci gap, this inverse of an order block with a Fibonacci gap here. All right. That's essentially the entry pattern that we're looking for. Let me see, why is it not working here? Boom, boom. Same thing. All right. Except in this case, on the lower time frame, there's a Fibonacci gap on the lower time frame, like the 1 minute. You would have saw it would have been this sell side liquidity here, right? Displaced up. This order block here is this right here. Came back, returned to origin, Fibonacci gap right here. Go to entry. So again, entry pattern should be the last thing you're focusing on, right? Entry pattern does not matter without the higher time frame context. So what I would encourage you guys to study and get the higher time frame narrative, right? No matter what time frame you use, right? Obviously time frames does not really matter, right? There might be certain ones that you can read better than others, but it really doesn't matter, right? It's the same thing. On a 4 hour, where we're coming from a level of liquidity, where we're going, buy side liquidity. That's the narrative. That's the context. You don't need to focus on the entry pattern. You shouldn't. If you can't see where we're going, the entry pattern doesn't matter. All right. Same thing here. It opened up. Where we come from, level of liquidity, where we're going, and order block here, which is liquidity. All right, which is the liquidity on the lower time frame. Then here we came back to liquidity. So again, focus on liquidity, imbalance, and order flow right before you look at the entry pattern. All right. Like I said, focusing on just the run on liquidity, shift, and return, you're going to be seeing that all the time. You're going to be confused.